The U.S. Federal Reserve has kept its interest rates unchanged, citing increased economic uncertainty. While the central bank has maintained its forecast of 2 rate cuts this year, it has also lowered its growth outlook and raised its inflation projections for 2025 and 26. Fed Chair Jerome Powell pointed to heightened risks, partly due to tariff-related inflation.
Let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it, a good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation.
Since returning to office, President Donald Trump has introduced new tariffs on key trading partners like China, Canada and Mexico, only to roll back some, creating market instability. Powell acknowledged that uncertainty is unusually elevated, complicating the Fed's efforts to balance inflation control with economic growth.
Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high.
The Fed has revised its economic projections, cutting U.S. growth expectations to 1.7% in 2025, down from earlier estimates. Inflation remains a key concern, with the central bank now forecasting higher prices in 2025 and 2026, potentially dealing interest rate cuts. Meanwhile, the unemployment rate forecast has been revised slightly upwards, signaling concerns about a potential slowdown. Despite this, the Fed is staying cautious, with Powell stating that recession risks have increased slightly, but remain low for now. Listen to this.
Low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Financial markets have reacted positively to the Fed's cautious stance, with investors weighing the impact of Trump's tariff policies on inflation and economic growth. The on-again, off-again nature of trade measures have fueled volatility, leading to concerns that unpredictable policy shifts could further complicate the Fed's job. Analysts warn that tariffs could push up inflation while slowing growth in investment, creating a difficult environment for policymakers. The Fed's latest decision was not unanimous, with at least one official opposing a slowdown in the balance sheet reduction. For now, the central bank remains in wait-and-watch mode, balancing inflation risks with the need to support the economy. For latest news, download the WION app and subscribe to our YouTube channel.